Where's your head right now on what's been happening in the markets last couple of weeks?
Well, I think that it has not been clear-headed thinking, and that's the key. What I would advise people is to try to ignore some of this idle speculation that we've seen. And I think just some of the movement, especially in something like Apple, is a perfect example of what is, in fact, idle speculation. So my view is things are generally still solid. Obviously concerned about some of those global headlines. But when I think about tech in particular, that's really my focus, is what's going on this frontier tech. Still am most optimistic about some of these small and even the biggest companies, where they can go over the next 2 years.
You mentioned Apple, and it's because of its importance, this dinner between Cook and the president. You think it's significant?
It is, and I think that the simple takeaway is this. There is widespread concern, obviously, that Apple's iPhone will be tariffed. I think this is another example, that dinner is another example of why that is a low probability. If I was going to put a number on it, I would say there's a 5 to 10% chance that the iPhone is, in fact, tariffed. There is this gross misunderstanding of how tariffs work, and ultimately the purpose of a tariff is to hurt would be the Chinese companies, not the gold standard of a U.S. company, the world's greatest company, as I would like to think of it, Apple. And so I think it's highly unlikely. There is the macro factor, which if, in fact, everything slows down, Apple would be impacted by that. But I think that there's a broad misunderstanding of what the risk is to Apple here.
Mark, how much did the macro play in to your picks and what you expect to run? I mean, are these at all defensive against possible tariff increases, trade tensions, or did you just ignore that altogether?
I think the honest answer is I largely ignored that. Now, if you were to ask me what would be the best recession stocks to buy or best internet stocks to buy in a recession environment, look, they're all cyclical, so they all would be negatively impacted. If you'll remember, way back about 10 years ago, Google's growth went down to 3% year over year in the worst of the recession. And my guess is it would go negative if we had a recession of that magnitude again. I'd look at, for a recession basket, I'd look for the stocks with the easiest, most defensible valuations. Facebook would still make our top pick there because it trades at 18 times earnings for premium growth. Google would also make that pick. But we sorted our numbers, we sorted our stock picks differently this time, and we went with the most contrarian calls, the most out of favor, high quality assets. So we go first Netflix, Facebook. It's not contrarian. It hasn't been knocked down, but the valuation is still compelling. We like the fundamental setup in the back half of the year. Uber is a really contrarian pick. We think fundamentals are going to improve in the back half of the year. And finally, Spotify, we've got some clear catalysts with that name.
Gene, I want to go back to Apple for a second. Stock's up more than 2.5% today. And actually, if you look year-to-date, 34%, and even month-to-date, with all of this renewed tariff talk that we've seen play out and roil the markets more broadly this month, it's only down 0.5% from August so far. Do you think this tariff stuff, or I guess you should say maybe the lack of tariffs on iPhones, is already priced into the stock?
I think there's still this, I'd say, idle speculation that goes on. One of the reasons why those numbers, in terms of the performance, is they had that strong June quarter, but the stock did trade off. It's basically down 5% from after that peak, and so it's largely traded in line with the market. My sense, too, I have a ton of respect for Mark Mahaney, competed against him viciously for so many years. I would also put in a contrarian camp. I know Mark doesn't do as much work on it, but Apple in a contrarian camp. And the contrarian is that most analysts have this view that to have a price target beyond $230 would somehow be a violation of some analyst code, and they need to apologize to the buy side. I in fact, believe that this stock could be $350 or greater, and some of the multiples that Mark's talking about as Apple's business evolves. So I would put that in a surprisingly contrarian category.
Gene, about Apple, a concern that I have that's been raised this season is what happens to Apple in the lead up to 5G. We saw Qualcomm talking about customers sort of backing off and deciding to wait rather than come up with the kind of products that they expected based on 4G. They're going to wait for 5G. We saw that show up in some of the other chip names. What happens to this iPhone cycle? Are people going to buy as freely, or at a certain point are they going to say, you know what, maybe I'll just wait until the 5G iPhone comes out next cycle?
So there is a risk to, specifically, it would be like the March and June quarters of 2020. If you get that close to 5G, you probably are going to start to hold off. Historically, investors have looked past any of those dips. And I think at the end of the day is that 5G is going to play out and build up or deliver on all of its hype, and I think the iPhone will be a beneficiary of that.
Mark, let's dig into Uber $62 target. What gets you there?
Well, fundamentals need to improve. We think bookings growth and what they call adjusted net revenue growth can accelerate in the back half of the year, partly because comps just get a lot easier here, but partly this company is starting to tweak now with pricing. That's one thing that has to happen for the stock to kind of re-rate. Another thing that has to happen is they need to prove out this path to profitability. Look, that's the single biggest question since the IPO. We're losing $3 billion a year in EBITDA. Like, people don't want to buy that. If you can show steady reductions in EBITDA, they did this in the June quarter, was down materially from the March quarter. If they can do this for a couple of quarters in a row, people will believe that there are long-term profit pools here. So those are the two things. Consistently bring down the operating losses, show that acceleration in bookings and in adjusted net revenue. That should lead to a re-rating in the shares, we think, as soon as 3 to 6 months from now. So we like the setup on Uber in the back half of the year.